Our breaking deal story, literally just moments ago, Paramount now amending its $30 per share all-cash offer for Warner Brothers Discovery in response to WBD's concerns about that bid. The per-share offer price not changing, but Paramount says in response to the Warner Brothers filing and comments made by WBD principals and advisors in television appearances, including on Squawk, that it's doing a whole bunch of different things in 6 different ways, and we're going to get into all of it. Gerry Cardinale is here. He's the founder and managing partner at RedBird Capital Partners, of course, a partner in Paramount Skydance. Gerry, it's great to see you this morning, and thank you for coming in to talk to us about these changes in the offer. As we mentioned, the price tag not changing, but some important details are, including perhaps most importantly, the backing of Larry Ellison and him now making this a personal guarantee as opposed to a revocable trust. Tell us about your thinking about the various parameters and different things in this new amended offer.
Well, look, you make a really good point. We've been trying to get our offer vetted since we submitted it December 4th. And, you know, this is a pretty simple thing. It's about shareholder value and it's about certainty. In fact, when we talk to Warner Brothers shareholders, they point out 2 things. One, why is this so hard? It seems pretty straightforward. And 2, why would they go exclusive with Netflix so quickly when you see these 2 offers lined up next to each other? We still have not been able to talk about shareholder value here. We're talking about all these other things. And so what we've done in this amended filing is we've cleared the brush on all the obfuscation around the offer. And, you know, the big one that you know, has been percolating. By the way, we only found this stuff out in their 14D9 filing this past week. And so like we've done through the 6 bids that we've made, we are being responsive to what their concerns are. The big concern was that Larry Ellison and his family is not money good for this transaction. And so we've come in and said that, okay, Larry will give a personal guarantee on the equity financing for this transaction, $41 billion. You know, what we did when they asked us between our 5th bid and our 6th bid, they asked us to backstop, and so the Ellison family and RedBird backstopped it, and we did it through the Ellison Family Trust. The Ellison Family Trust, which has been around for close to 40 years and has been the counterparty in tens of thousands of transactions, including the Paramount Skydance deal, that is where all the assets resides. That's where, and it's got $250 billion of assets in there, anchored by 1.2 billion shares of Oracle. That's over 6 times coverage of the $40 billion in equity that we're backstopping. But that seems to be the sort of red herring that is out there and preventing our offer from getting vetted and taken seriously. So we took it off the table. It is now off the table. All right. The second thing is this.
Before you go there, one question on that front. Had they not told you? Are you suggesting prior they had never raised this as an issue in terms of the revocable trust and the guarantees?
We are still waiting to get a response on our December 4th offer. Full stop. We found out about these things in the 14D9 filing, and so that is why we went to shareholders. You know, the shareholders own this company, and so we went to them directly because it's clear when you look at our offer and you look at Netflix's offer, our offer, just to reset the table, $30, all cash, 100% of the company, and a clear path through regulatory. The Netflix offer is you need 3D glasses to understand it. It's got Netflix stock, which is blown through the bottom of the collar, and it also has another currency, another stock that is to be issued. That is the stock of the spin-out company. And you know, and I think the chairman of the Warner board came on one of your shows last week saying that that is $3 to $5 a share. I'm a math guy. All the people on our side are math guys. That's not $3 to $5 a share. It's $1 a share. When you look at what they've levered it with, $15 billion of leverage on TBS, TNT, CNN, and you know, the only independent variable there is what does it trade for? For it to trade at $3 a share, you'd have to assume a 6 times multiple, right? We're assuming, we're giving them the benefit of the doubt and assuming the same multiple that your Versant is trading at, which is 4.5 times. At 4.5 times, the math is the math. The EBITDA is the EBITDA. The leverage is the leverage. It's $1 a share.
Gerry, our Versant should be trading at 6. I'm sorry.
Yeah.
No, I'm kidding.
We can debate on that.
Yeah, sorry to interrupt.
That's right. But the thing on the stub that's really interesting is we can't even talk about these, have not been able to talk about these issues, right? And so no one talks about, on the Warner side, no one talks about the value of the stub. But here's the interesting thing. It doesn't stop at the value of the stub. If that is over-levered, that spin-out will not be able to happen. And if that is the case, then that $15 billion of debt is going to need to be reallocated over to studio and streaming. So just for the sake of argument, let's say, Versant trades at 1.25 times leverage, trading at 4.5 times, right? At $15 billion of debt, this spin-out is close to 4 times leverage. So let's say we take $5 billion of that debt out of the 15 and we move it over to studio and streaming. That still reduces it only to 2.5 times leverage. That's still double what Versant has. But nevertheless, just illustratively, let's say we do that. What will end up happening is that will squeeze the amount of cash that Warner Brothers shareholders get at studio and streaming, right? So what effectively will happen if you move $5 billion of debt over from the SpinCo over to studio and streaming, Warner Brothers shareholders will be effectively exchanging $2 a share in cash for $2 a share in equity in the SpinCo, which is a declining asset. That's dead on arrival. That is a disaster. And that unwinds this entire deal. You don't have to do any of that extrapolation. You don't have to deal with 2 stocks, 2 currencies, 1 to be issued, let alone, that's before we get to the regulatory risk, right? Our regulatory risk is straightforward. Our deal creates competition. The Netflix deal kills competition. Netflix buys HBO Max. It's 420 million streaming subscribers. The next number 2 is Disney Hulu at 184. No wonder the constituents in the ecosystem, talent, content creators, theatrical exhibitors, are losing their minds on this because they see the pricing power that will create, and hence they see what's coming, which is everybody in the value chain is going to get squeezed. So that is not good for Hollywood.
What is the rationale for Warner Brothers board and David Zaslav then? Why favor the Netflix deal? Just honestly, does David want a job? He wants to keep his title. He wants to run the studio. What is the reason?
It's a great question, and it's the question that I get from Warner Brothers shareholders. No one knows other than, look, you got to remember, our first 3 offers here got the board to put the company up for sale. So I think we were always a little bit on our back foot because they were originally spinning the companies, breaking it up. And, we came in and our offers was for 100% of the company. And I think it just got them to put the company up for sale. So we were always a little bit on the back foot. But at the end of the day, Joe, the shareholders own this company. The board doesn't own it. David Zaslav doesn't own this company. And this should be a lot, Warner Brothers shareholders are right. This should be a lot more simple than it is. It's very simple. It's shareholder value and it's certainty of closing.
You said the regulatory path is clear. Is that because of the president's relationship with the Ellisons?
No, absolutely not. Look, we have a great relationship on both sides of the aisle. The relationship I focus on and that David Ellison focuses on is our relationship with the rules, okay? And the rules here are pro-competition, pro-consumer. We have, if we come together, Paramount Plus and HBO Max, you will create a 3-horse race in streaming. The North Star on this entire investment is direct-to-consumer and streaming, and we will create a 3-horse race. Netflix, our pro forma company, and Disney. That is great for the entire value chain.
Can you figure out why Netflix wants it so badly in that it doesn't help with what the future competition for Netflix is?
Look, I mean, when I see the elements in the value chain, the talent and the content creators and the theatrical exhibitors, all expressing these concerns, and yet some of them are afraid to raise their head above the parapet, for fear of retribution. That suggests monopolists to me, right? And so, guys who are in this position, monopolies, they want to, kill competition. And look, I mean, that's why we have these rules. That's why we have rule of law. That's why we're going direct to the shareholders. So I can't speak for any of that. All I can speak to is the facts. And the facts, it is absolutely clear. At a minimum, there needs to be a vetting of these 2 offers. There needs to be a discussion on value. There's never been a discussion on value. It's been about all this other stuff. What we did today in this announcement is we took all that other stuff off the table. Not only did we address the backstop and the personal guarantee, there was an issue around the irrevocable trust. And so Larry has also agreed to not revoke the trust during the pendency of this transaction. He's confirmed what the assets are in the trust, anchored by the 1.2 billion Oracle shares, as well as confirming no material liabilities. We've agreed that we will embrace further flexibility in terms of interim operations between signing and closing, including in discussions with their bondholders and their banks. And we've increased our regulatory reverse termination fee from $5 billion to $5.8 billion, which matches what Netflix's was, because we have absolute conviction in our ability to get through regulatory.